Good morning. Good morning. Good morning. Let everybody file in for just a minute and then we'll get going. Good morning. Good morning. Well, Prison Mike, what a name. Good morning. Good morning, Butch. Hope you're not joining us from prison, Prison Mike. Maybe you are. All right. Good morning, everybody. You can check out our pre-market prep post if you've not. I went over some commentary there, which we'll go over here. Prison Mike. Oh yeah, Prison Mike from The Office. Yeah, Office can be prison too. Yeah, cubicle. I encourage everybody to get out of the cubicle if they can, somehow, some way. All right. Thanks, everybody, for joining us. This is Michael coming to you from Game Edge on Thursday, January 8th with our pre-market prep session. As always, here at Game Edge, we'll cover those three pillars: sentiment, structure, and trend. As that is why Game Edge will set you free. Absolutely. And then we'll cover some individual equities. And I'll talk a little bit about our P2P strategy that a lot of our members continue to have success with from a mechanical standpoint, as well as an intraday scalping or a swing trading standpoint also. So let's go ahead and jump right into it. We'll jump right into our trend. This is our market trend model, quick orientation based on the tick index. You can research that at your favorite investing website. But the bolded white line is our intraday instantaneous cumulative tick. Basically, that is telling you buying versus selling in the overall market and who's winning the battle. Obviously, yesterday we started seeing some rollover. I discussed this pre-market prep in our pre-market prep yesterday. Go back and review that. That historically, when we get into day 3 to 5 of an uptrend, we'll start to see some consolidation or pullback in the market trend model. Now, we can continue to run. If it is a full bull market, we can continue to run 5 to 7 days, but usually in the 3 to 5 day range, we'll start to see some profit taking, some monetization, and we'll start to see some consolidation and pullback. Give me 1 second here. So it's kind of what we were seeing yesterday with a market trend model rolling over under these shorter term moving averages and a pullback kind of within the overall market. We talked about 69.60 yesterday. That was going to be difficult to get above due to the structure we were looking at. And then most likely if we got below 50 and 40, we'd see a pullback to 69.20, and that's where we closed yesterday. So review all that in the pre-market prep. Let's go ahead and jump right in. We'll look at our trading view chart with our market trend model. Sorry about that. Wasn't ready to go. Go on this morning. So here's our market trend model from yesterday. Really right around the 12:50 to 1 o'clock hour, we started seeing a rollover in what we call our market trend model, or our intraday instantaneous cumulative tick. And we started moving under these ribbons. Once we start doing that and we see some overall pullback and we see some rejection at those key areas, then that's an opportunistic short possibility. And then when we got under 69.50, we bounced off 69.50, but we did not see the resultant new high in the overall cumulative tick or our market trend model. And then actually our official Game Edge source, which is a little bit less sensitive, the ARCX, did not show as much buying as the tick US, which is the sensitive market trend model. So this is all on TradingView. All the code is in our Discord. Come join us. We'll be happy to help you. But again, you can see that divergence where you're seeing in the ARCX in the US, not really indicating buying coming into the overall market. Great opportunity to short below 69.50. And then we just saw that roll down towards 69.20. We also saw our volume command indicating that there was a significant amount of puts going into the overall complex. So we had a great confluence that we're most likely going to see a pullback, and that gave us a great opportunity for a short down towards 69.20. So with that said, obviously key to watch the market trend model for today to see if we could recover and see if we start moving back to the upside, capture these shorter term moving averages indicating bulls and buyers are stepping in. If not, I believe we'll probably have some more weakness, roll down towards 6,900 and then 68.80 below that. So we'll watch that at the open. All right, let's go ahead and jump in the SPX options market. Again, this is where we look at our sentiment and structure. We separate the SPXA from the SPXP. SPXA is our cruise ships. These are institutional positioning. You'll note by the January monthly expiry that's chosen here via our web app. Again, we're call dominated, so pullback should be supportive. I discussed 68.80 already. That's the bottom of our expected move today. It is a confluence with the top of our transition. So staying above 68.80 would be vitally important. We get below 68.80, we kind of get in an area where we could pull down towards 68.50. And if we lost 68.50, we'd be looking for 68.20 if we see a significant change in sentiment and structure. As of now, we're call dominated via institutions. We're seeing some weakness creep in, though, via the SPXA. I'll show another chart that we look at here in just a minute. Above these areas, we'd be looking for 69.50 to the top. Again, we need to get above and stay above, and then 7,000 to the upside speculation. All right, let's look at the SPXA delta balance. I look at this as the SPXP every day in our pre-market prep, but let's look at SPXA. The green dotted line is our right-hand plane. This is above spot price. This is your out-of-the-money call speculation or in-the-money puts. So we're below zero now in that area of speculation to the upside. So we're losing some speculation to the upside via the cruise ships and tankers, the larger boys and girls that are managing money. Now, left-hand plane entrenched within the money calls. So that's why I say pullbacks would be supportive, but our upside is losing a little bit of juice or rocket fuel to the upside. So we'd like to see this move back above zero. You'll notice that the expiry is on out in time. Obviously, February expiry is back above zero. Delta balance at 1. Everything's bullish there. Just right now where we're at, upside speculation starting to degrade just a little bit. So that's why we talked about yesterday, 69.50, 60 was going to be difficult to get above. Not sure we'll get to that 7,000 mark before the monthly OPEX. So we'll see how this continues to play out. But just that speculation to the upside, you have to have that out of the money call speculation coming in for the opportunistic price to appreciate in the SPX option structure. All right, let's move on to the SPXP. These are our speedboats. Again, structure. We picked the quartile here. This is a interactive scale. Allows you to pick the most weighted OIs heading for the SPX option structure. So it's a nice tool and feature we added. And this tells you 76% of the total OI in the structure is now lit up and indicated, and we're looking at that structure. So we're call dominated still on that. We call this all expiries, but now we're kind of moving towards the highest quartile expiries, even though we used to call it all expiries. So call dominated, so this will be supportive. Again, 6,900 key level to stay above. You'll notice a low net OI area there at 69.05. To get below 6,900, probably look for 69.80, 75. Confluence of the SPXA transition. If we're above 25 to 30, transition area, as you see, GEX and DEX transition, a little offset there, misaligned, 69.50 overhead. You see significant charm come in. These are out of the money calls. Again, these will continue to decay depending on what the expiry is. And then above that area, we'll be looking for 65.70 and then 7,000. Again, 65.70 is where we got rejected yesterday. COTMC, historically, this is a proprietary game edge level. This is where we see out of the money calls go in the money, and we see some monetization usually into that area. So 50 is that first hurdle. 25.30 is the first hurdle. 50 is the next largest hurdle that we need to get above, and then 60.65, and then on up towards 75.80, and then 7,000. So we got a nice clear trading plan to the upside, nice clear trading plan to the downside, if then levels as we get ready to reverse the SPXP option structure. All right, let's jump in the GEX ratio. Again, this is like a put call ratio, but it's added a time component, which is gamma. So we're more weighted towards the short dated call versus put gamma. I talked about this yesterday, pre-market prep, that we needed to see the SPXP GEX ratio continue to rise as spot price was rising, which we saw. But then we saw kind of a peak at 2.5. Historically, if you roll back, 2.5 is an area where we see a pullback. So again, as the mosaic, the market trend model reaching day 3 to 5, SPX not seeing the upside out of the money call speculation, and the GEX ratio reaching a peak at 2.5. this is where we were at. And historically, we see a pullback or a consolidation. So and that's what we got yesterday. So this is like a mosaic where we're reaching extremes. And then now we pulled back all the way to 1 on the delta balance, or sorry, the GEX ratio here. Bulls are still in control with in the money calls below us, but that out of the money call speculation needs to start ramping back up to the upside for us to have an opportunity to move to the upside. Now, this can be either with 0 DTE or multiple expiries for the week, which is why we watch these tools day over day, and we watch our intraday vol M command. So we look for call versus put speculation, and then we watch our ORI change day over day. Are we getting more speculators speculating to the upside, opening calls on out in time and expiries? And we'll look at that with the delta balance here in a minute. Or are we seeing the structure not advance or the structure move to the downside? 3 simple states: structure advancing, structure decreasing or declining, or structure staying the status quo state. And that lets us know where we have the opportunity for price to appreciate. So as of now, we're seeing a declining GEX ratio. So again, we're seeing that out of the money speculation drop. So price appreciation is probably going to be difficult for now. 50 to the upside, 60 to the upside would probably be the cap. And then obviously if we see this drop below 1, then that would mean bears are taking overall control. All right, SPXP delta balance. This is key. Heading into today, we talked about this. Heading into the 8th, again, quick orientation. The green dotted line is the right-hand plane. Guess what? It is in a negative slope, dropping below 0 towards -1. Out of the money call speculation is not present for today. Now, that can be overcome intraday. So I don't want anybody to say, well, you told me we weren't going to price appreciate. It can be overcome intraday if we see call speculators coming into the overall complex. If not, it's going to be difficult for price to appreciate. I said yesterday, 65.60, probably going to be difficult to go above. Guess what? We rejected at 50.60. Today, left-hand plane is actually seeing some drop also. So that's a little bit of concern as the in-the-money calls below us are probably degrading, and we're seeing some out-of-the-money put hedging coming in. Now, this could be opportunistic, or people are placing bets right under spot price. It comes down, they capture that quick move to the downside, their puts go in the money, and they monetize those puts, and then that pushes us back up away from 6,900 or whatever our key level is going to be for today, which we'll talk about here in a minute. Delta balance dropping towards -1, though, is the canary in the coal mine, saying, hey, the overall structure and complex continues to weaken. We're seeing that out of the money speculation drop, right-hand plane. You're seeing in the money calls drop. You're seeing in the money, out of the money put hedging come in, and our delta balance is getting dragged down, right? So again, cautionary sign for today. Not necessarily saying the whole market's going to fall apart, but the upside appreciation is probably going to be difficult. Again, on out in time expiries, what are we seeing? We're seeing the left-hand plane continue to drop. That's your in the money calls. That's out of the money put speculation coming in, dragging your delta balance down towards 0. Your right-hand plane is trying to stay above 0 and 0.5. So we'll continue to watch this day over day. But this is how we look at the structure. Is it advancing? Is it declining? Or is it staying status quo? Right now, you could say that structure is actually coming down a little bit. So again, market doesn't look like it's going to fall apart, but it's saying upside appreciation is going to be difficult. So if you're long the overall market or long individual equities with what we're seeing in the market trend model, as well as the SPX option structure, just be a little bit more cautionary, manage risk, maybe not put as much capital to work. That's a simple statement. Okay. All right. SPXP net stack command. Locked horns. This basically means in the money calls below us, which I already talked about, 68.50. In the money puts above us, 69.25. You see the charm levels, gamma, Vanna. Vanna on the right-hand plane is larger than the left-hand plane. So if we see volatility drop and we see calls go in, then yes, we can have price appreciate with a Vanna tailwind. So we're going to watch this. I would look for 68.50 to the downside if the market really starts getting more weak under 6,900. Looks like 68.50 will be that stabilization area that we'd look for. All right. All right. Moving on, the SPXP 0 DT heading into today, call dominated, but this is what we're talking about. We're almost 0 on net GEX. Usually this is much larger. This is in the 3 to 4 to 5,000 range. That means call domination is fully entrenched. We could quickly, easily flip to put dominated today, especially if we're under transition and we start losing 69.15, 6,900. Then I'd look for 68.80 to the downside. If we recover 25.30, I'd look for 50 to the upside. And then I'd look for some stalling around 55.60. If we get above 60, we'd look for 69.80. What we're going to have to see, though, is volatility drop, out of the money calls come in via our volume command, and the market trend model turned back to the upside, indicating that buyers are coming into the overall market. All right, hope that helps. All right, let's jump over to our trading view chart really quickly. All right, pre-market. Sorry about that. Let's see. Pre-market, we're seeing us react right around the drunken sailor range, which we talked about, 69.15. If we fail 15 and we actually see some puts start coming in, the market trend model continues to the downside, I'd say we retest 6,900 or even down here towards 69.80. Again, if we get up to DS, I'd watch for a failure at 25.30. We're still in the failure window until we take back 0 GEX and P trans for 0 DTE, and this is full expiry. Above 30, we look for 50 to the upside, which is the top of DS. That's our trading plan for today. For me, I'm going to continue to look for rejections at DS and 25.30, opportunistic shorts. If we get above transition, my thesis changes. I'm probably looking for a long up towards 69.50. Very simple. That's it. That's all we're looking for. And then if we get below 6,900, then obviously I'd be probably a little bit more full short for a move down towards the low at 68.95 and then 68.80. So I'd probably add to my short and look for a move down. Again, resulting depending on what the volume command is doing, as well as the market trend model intraday. So hopefully that helps. All right, let's answer your questions. Chuck, I must have missed it. What is the time frame for the 3 light lines on the MTM that the tick line straddles above the colored ribbon? So for trading view, this is actually a 1 minute chart, and that's how our tick is orientated, is for 1 minute. Okay, 1 minute. Now this is the 195, 390, and 600. This matches our closely, with a grain of salt, matches our trade station moving averages. Okay, so you're seeing longer term trade station moving averages on a shorter term 1 minute chart. Okay, so that gives you an idea of what's happening, and you can see when these moving averages start rolling over, we start getting a lot more cautionary, or when the market trend model starts moving below these moving averages. So if we expand this to the upside, let me move all this to the upside for you. So previously we were seeing significant move to the upside in all of the moving averages, right? You can see this was what we were talking about. We crossed over here. I went long SPXL. I took profit into not yesterday, but actually the day before. And then we peaked out at 69.60. So I left slight profit on the table, but now we're pulling back to 69.20, which I'm happy with that. Only reason I was seeing that is because we were starting to see some stalling in the structure, as well as the delta balance. And then the market trend model was trying to push higher, but we really weren't getting new highs in the overall price. So that these moving averages actually match our trade station ribbon, which is our gold standard. But then the shorter term is basically intraday for 1 minute time frame. Hope that helps. Wondering what we saw intraday yesterday that indicated that move to 69.20. Pre-market structure, go back and review that video that I did, that if we got below 50 or 40, yeah, exactly. Exactly what Paul said. Paul is our options extraordinaire, option structure extraordinaire. He said structure yesterday, DS upper was 69.50, and below this we had a weak gradient into the Greek gradient into the transition textbook. Yes, exactly. Prison Mike, exactly what Paul just said right there. And then once we start losing those key levels, we rejected at 60, 65, which there was not a lot of speculation above 60, 65. And then 69.50 was DS upper, and then we started losing 69.40. And then actually, once we retested and lost that 50 level, and then we started seeing 40, we also started seeing linear down, or dealer adjustment bars to the downside. Let me move this back down. So what we call dealer adjustment bars is basically just stacking of sell bars. So this means that the dealers are people are opening puts, which we saw a huge spike in puts via our volume command. Let me pull that over real quick. I mean, this was textbook yesterday in our volume command also. Let me see if I can pull this over here. Here we go. Let me pull the volume chart over. Hopefully everybody can see this. But early in the day, we were seeing, so this was the 11:40 hour, you were seeing puts, or calls outpacing puts, which, as you would anticipate, price was appreciating. We hit that 69.60 level, and then see the puts just start to spike and come in very rapidly, right? So we were just over, just puts just coming in abundantly. You see the amount of strikes here. the volume traded, and then we saw this huge spike up here around 2 o'clock. Just a massive spike in puts, and then you see all the puts coming in. So when we start seeing this, obviously puts are taking control of the overall structure. You're losing key gamma delta levels, and the market trend model is moving to the downside. So, I mean, there's only one resultant thing that can happen. And then our vol M command was shifting very rapidly on I'll pull up let me see if I can pull this over. So here's our centroid for the yesterday, our vol M command. And you can see that actually we had crossed linear fit lines. We started pulling the call line up, and then it started flattening out. Once the call line flattens out, it's mean out of the money speculation drops. You see the call centroids start dropping, and then we just start pulling everything to the downside. And you actually see the puts centroids start dropping, negative slope, and then just pulls everything back to the downside on that. So hopefully that helps on that. All right, back to our market trend model. Looks like people are asking questions. They are okay. Yes, they are within. Ask in the Discord, see if he can update colors. Okay, perfect. Hopefully that helps there. All right, so again, we continue to reject or react at the bottom of DS, which is 69.15. So that is an area I'm going to be watching. Again, if we're under transition areas, I give the benefit to the bears. Oh, absolutely, Prism Mike. Yeah, I mean, and that's what we're here for education. Again, go over and check out GameEdge.us. I mean, I would be happy for you to join us. I think we have a great trading community, but go out and check GameEdge.us for everybody here. Appreciate everybody joining us. Like and subscribe on X and YouTube. But check out our newsletter, Beyond the Bell. This goes over our thesis, our trading strategy, and our tools. It's all free. Bless my son. And check out our free courses. Bless my son again. GameEdge Fast Pass, all free flagship options course. We have our team has spent an infinite amount of time perfecting this, and then come join us in our Discord. But we have all these tools. You can put them on your charts. We're in the trading room with you. We're trading. All of our team is traders. We do live trading, but here's the caveat. We are, yes, exactly, Paul. Exactly. Okay, listen, here's what I'm going to say. We do live trading, okay, but we are not going to give you, yes, Paul does live trading. He tells you when he puts spreads on, if he's available to be in the Discord for the day. We have team members that talk about their entries, but that is not what we are. We are not a indication service, okay? And we don't want to be. That's not where we're going to move. So if that's what you're looking for, that's not what we're going to do. The reason is because you and I have different risk profiles. You and I see the market completely different. What we do provide you is a suite of tools, complete suite of tools for you to build your own trading thesis, your own trading plan, and navigate the SPX option structure, as well as mechanical portfolios that outperform SPX buy and hold by a large margin. Okay, so that's what we provide. We want you to be able to do this when Paul and I and Taylor, Paul doesn't play golf, but when I'm on the golf course, we want you to be able to start your day off, do the SPX game plan like Paul does, very granular, produce your own trading plan, and execute for the day and be profitable. Exactly what Paul said. Teach a man and woman to fish, and he should feed themselves for their life. That's what we want to do. Our passion is education and helping everybody dispel all of the junk out there on the on X and YouTube and everything about Gamma. I mean, honestly, if we would change our name, we'd be called Delta Edge. We've talked about this before, but we do Gamma, but we do all of the Greeks, right? And it's a mosaic, understanding Gamma, Delta, Vanna, and Charm on this net stat command that we talk about, and understanding where these points at that add to the option structure. Where do they amplify price movement? Okay, that's what you have to understand, and what is happening with the structure. And then how's the structure changing throughout the day? As we tick along, yeah, Greek Edge doesn't roll off, so yeah, I know. We could all wear togas, I guess. But as price is traversing the option structure, it's changing throughout the day, right? Now, OI is obviously, nobody in the industry gets OI updates, but as the price is traversing the option structure, then you can see the change of what is occurring and how price gets amplified moving through these levels, right? And then as we tick throughout the day, obviously charm has its place, and then Vanna has its place also. But that's what we do. We want to dispel all of the myths about what is happening throughout the day. And there is a ton of junk out there. So hope that helps. All right, on to individual equities, and then we'll be wrapping it up. Thanks for joining, Paul. So Netflix, let's just look at this Friday expiry first. Call dominated, but below spot price. You're at the top of transition. 92 is PGEX. That's highest sensitivity peak, most likely of speculation. You see all of this red net delta overhead and all this red charm going to be difficult for price to appreciate. If that's the only takeaway, again, it's a lot more involved in that, but that's the quick takeaway. We systematically go down this. I look to see where transition is, where spot price is related to transition, and then where PGEX and INGEX are, as well as COTMC. Let's go on to the next expiry. So next expiry is put dominated. The structure continues to weaken on Netflix for the next expiry. I'm going to say price appreciation on Netflix is going to be very difficult. All right, that's those two expiries. So that's not a bullish stock that I'd be looking for. MP, this expiry, call dominated above and below spot price. Spot is fairly distancing from. Yeah, I will, Paul. Yeah. Yeah, I'm almost running out of time though, so we may have to cover that. So transition area, prices above transition area, call dominated. Everything looks good on MP. The only caveat is COTMC is 67, but we actually see PGEX under spot price. Let's look at the next one. 16th, call dominated. We actually see the structure advance. So let's look between these. As you see PGEX at 60, next structure, PGEX advanced to 65. That means speculators are moving to the upside. And then we're call dominated and you're significantly above transition. So MP looks like it can appreciate between this expiry and next expiry, which would be the 16th, up towards 65. Hope that helps on that one. Carvana. Yep. Let's go to CVNA. CVNA has actually been on our P2P scan. We had an excellent trade in Carvana via our members from P-Trans to PGEX. I think we're up $13 or something like that. I think it pulled back a little bit yesterday, but so 119, or this is Friday's expiry. Call dominated. You're within transition. Transition's a little bit wider, so it could be a little choppy on the price action. Absolutely. But we still PGEX at 470 to the upside. So we have upside speculation. You have a runway up towards 470. Total OI is only 51,000 though for this expiry though. This does meet our 100,000 OI filter, but I like to see this a little bit higher on that. Let's see, next expiry. So next expiry, you see that jump to 245, which is great. So that gives us an idea that significant more OI within the overall structure. So it gives us a better idea of where our market participants are positioning. So 470 was PGEX, 460 is PGEX here. So that'd be the area I'd look for some stalling to the upside. You see the structure actually drop a little bit. So upside appreciation may be a little bit more difficult, but 460 to the upside. Pullback should be supportive or call dominated. You're just right above transition area. So staying above transition to put you in a more favorable call dominated gamma environment is what you want to see there. So, all right, Mara. Let's see. Put dominated, low. Okay, 100,000 OI. Net GEX is negative 3.28 million. Significantly negative. Put dominated. The structure is very negative. So price appreciation is probably going to be non-existent until this changes. Next expiry changes to call dominated. So all of these puts need to expire into Friday or be monetized. So next expiry comes to call dominated, but you see the significant red net delta above. PGEX and INGEX at 10 and 1050, transition area there, and significant charm overhead. So I'm just saying, even though we are call dominated, but it's going to be difficult for price appreciation. So upper quartile, yep, let's go ahead and click that. So the whole quartile is at the 25% quartile is call dominated here, but again, significant overhead charm. I'm going to use the word resistance, right? But significant overhead charm headwind for price appreciation to the upside. And then transition area is right at 10 and 1050, which is where we're at right in the spot price. So the structure is not advancing through the next expiries. So yeah, monthlies, exactly. Yeah. Yep. So basically what Paul's saying here is weeklies are weak. And then when we click the top 25% quartile, you look at these. So it's the 16th and the 20th. So these are the monthly expiries that are driving the whole bus basically on these. And that's why we added this tool is you can click on these and see which the highest weighted are driving the bus for the overall complexes. And I think that's important. So if you were, let's just say if you were trading or wanting to trade, obviously you need to be looking at the monthly expiries instead of the weekly expiries because these are driving the bus. So if we just looked at this monthly expiry, like I talked about, it is call dominated, but you have significant headwind here via red net deltas here, as well as significant charm overhead. So price appreciation is going to be difficult. Plus, it's a $10 stock for me. That's a little bit lower than what I like to trade. So that's just how I look at it. So, all right, is that good? Thanks everybody for joining us this morning. We're already into the open at 9:30, so I need to jump off here. Thanks for joining us, Paul. Again, like and subscribe on X and YouTube. You'll be notified when we go live with our content or post anything. And then check out our pre-market posts for this morning. Let's go ahead and jump over. Since the market's already open, let's go ahead and jump over and see where we're at. Yeah, absolutely. So right now, DS 69.15 is going to be that key area to get above, and then watch for 25.30. Let me go over here. Okay, so we're already open. This is our updated chart on SPX. And you can see extremely weak MTM, even though we're just open here. So this is going to have to do an about face, turn back to the upside, cross at least over these shorter term moving averages as well as the ribbon. And you can see these ribbons are starting to turn to the downside and cross to the downside. So that's going to provide an overhead area. It's going to be difficult for the market trend model to get above just from a visual standpoint. And then when all these turn to a negative with negative slopes, or all these roll over and negative slopes to the downside, again, that tells you that there's more selling in the overall market. All right. So 69.15, we're going to watch this, and then overhead 25.30 to get above. So we'll see how this plays out. All right. Thank you everybody for joining us. As always, manage risk and make it a great day.